It was the perfect crime, hiding in plain sight. In 2008, while the world was focused on collapsing banks and vanishing jobs, one man was silently detonating a financial bomb from inside one of Europe's largest banks. Reports suggest that his unauthorized trades, made behind locked computer terminals, nearly wiped out the savings of millions and sent shockwaves through global markets. He wasn't a terrorist with weapons. He was far more dangerous. He was a trader with access, and his weapon was the blind trust of a billion-dollar system built on illusion. Our investigation reveals how this single individual exploited a simple software loophole, deceived the world's top auditors, and gambled more money than some nations produce in a year. We expose how the world's most secure institutions became victims of their own arrogance, and how you can protect yourself from a system that rewards deceit until it explodes. This is the true story of the man who destroyed the market. At the start, he was invisible, an ordinary mid-level employee working long hours in the silent halls of a massive French bank. He wasn't a genius. He wasn't even on the radar of upper management. But what he had was access to a risk management system that everyone believed was unbreakable. Our analysis shows that the system, known internally as the ELYSIS Control Hub, had a fatal flaw. It was built to prevent fraud, but its strength was also its weakness. The system trusted the data entered by employees without independent verification. That meant that whoever controlled the input controlled the truth. And he knew it. He began with small trades, tiny bets disguised inside legitimate positions. When he lost money, he entered fake offsetting trades into the system, showing paper profits that didn't exist. The illusion was perfect. On the surface, his record looked flawless. Month after month, he appeared to be the bank's most successful trader. Bonuses grew. Praise poured in. Behind the screen, however, the losses were mounting, hidden behind layers of code, false IDs, and fake confirmations. No one questioned his success because success is the easiest lie to believe. The deception might have ended there if greed hadn't taken over. By 2007, he had discovered the ultimate temptation: leverage. Using borrowed capital, he began placing bets worth tens of billions, trades so large that they could move entire markets. He wasn't investing, he was gambling with the lifeblood of the bank itself. Reports suggest that his secret portfolio had grown to over £50 billion, more than the entire value of the bank's own capital. And yet, no one noticed. When internal auditors raised red flags, managers brushed them aside. The trader was a star. His division was making record profits on paper, and questioning him meant questioning success itself. The deeper truth was that the bank didn't want to see the risk. It was easier to believe in profit than to investigate the process. But then came the point of no return. By early 2008, his losses had ballooned so severely that unwinding the trades would crash the entire market. The bank couldn't expose him because doing so would expose itself. So they stayed silent, hoping his next bet would be the one that turned it all around. Instead, it became the detonator. That's the moment when the crime evolved from fraud to catastrophe. Our team reconstructed the critical 72 hours that followed. On the first day, the bank's risk desk discovered a discrepancy, a trade that couldn't be matched to any external record. Within hours, the scope of the deception unraveled. The fake trades weren't isolated. They were the foundation of an entire false portfolio. By day 2, senior executives realized they were sitting on the largest trading fraud in modern history. By day 3, the secret was out. The bank lost more than £5 billion in a single week. Its stock collapsed. Global markets wavered. And when investigators pieced the puzzle together, They found a system built not on innovation, but on blind trust. The man behind it all was calm when they arrested him. He told police, "I was just doing my job." That statement haunted our investigators. Because in a way, he was right. He didn't hack the system. He didn't break into accounts. He simply used the system the way it was built, to reward appearance over reality. The shocking revelation our analysis uncovered was this. The fraud was invisible not because it was brilliant, but because it was ordinary. It thrived on bureaucracy where complexity becomes camouflage. He forged confirmations so simple that no one bothered to verify them. He exploited a bank culture obsessed with quarterly profits over risk. Every level of oversight failed, not through conspiracy, but through convenience. And when the truth finally broke, the damage spread far beyond the walls of one institution. Confidence in European markets evaporated overnight. Billions in pension funds were wiped out in hours. Every trader in the world suddenly realized that the data they trusted could be fiction. One man had exposed a global truth. The financial system was built on belief, not certainty. The aftermath was chaos. Investors panicked. Politicians called for reform. But behind closed doors, little changed. The same algorithms, the same blind risk systems, and the same incentive structures remain in place today, just under new names and new branding. Reports suggest that even after the collapse, banks quietly settled lawsuits, wrote off losses, and moved on. The trader served a short prison sentence. Executives kept their bonuses. The machine survived, repaired just enough to keep spinning. But what they didn't fix was the flaw. Our investigation found that similar vulnerabilities still exist in many global institutions, systems where a single employee with the right access could once again gamble billions before anyone notices. Technology evolves, but human blindness? That never changes. So what can you do? How can you protect your wealth from a system designed to fail quietly? The first step: never trust a single source of truth. If your savings, investments, and records exist entirely inside one financial ecosystem, you're exposed to the same systemic weakness that allowed this fraud to happen. Diversify not just across banks, but across asset classes and storage systems. Second, follow the data, not the narrative. When a company or fund promises guaranteed returns or risk-free growth, that's not security, it's bait. Every major fraud begins with the promise of safety. The moment you stop questioning, you start losing. Third, create an independent record of your assets. Digital statements can vanish, but physical verification, certificates, tangible holdings, or decentralized ledgers provide proof that no insider manipulation can erase. Our team calls this the three-wall defense: diversify, verify, fortify. The collapse of one rogue trader wasn't an anomaly. It was a warning. The same arrogance that blinded billion-dollar institutions still governs the financial world today. Complex systems run by humans who believe they're too smart to fail. But failure isn't a bug. It's the inevitable outcome of a system built on trust without transparency. The lesson is simple. The market doesn't need a terrorist to destroy it. It only needs one trusted man with too much access and a world too distracted to look. This story is more than a scandal, it's a mirror. It reflects how easily we surrender control, how quickly we forget, and how fragile wealth becomes when the truth is optional. Protect what you've earned. Understand the systems that hold your money. Because the next collapse won't start with a crash, it'll start with applause. Subscribe to the Hidden Wealth File to uncover the dark truths the financial world hides in plain sight. Our next investigation exposes the secret partnerships between global banks and AI trading systems that already control more than half of every transaction on Earth. Don't just watch, prepare. Because in the end, knowledge is the only asset they can't steal.